Hey guys, Marshall Sparkman here, VA loan specialist. I want to do thanks for tuning in. I want to do another quick video on talking about VA credit requirements. This is a hot topic. This may be a lengthy video, but I think it's super important to understand. It's probably the most questions that I get about from veterans wanting to get VA loans are about credit. So in response to that, we've started a credit repair company to especially help veterans get your credit right, because what happens is when we get out of the military, they say 80-something% of veterans take a 70% decrease in income from when we get out of the military. It's ravenous in the veteran community. When I first got in the mortgage business, people started referring me veterans, and I started doing the mortgages and looking at people's credit. I was like, oh my God, our veteran community really suffers. So it's my passion and my mission, continued mission, just to serve our veteran community and help them understand credit and get your credit right. So purpose of this video, we're going to talk about, as far as the VA loan is concerned, what the credit requirements are. So hopefully you're going to get a really good understanding of what exactly is required as far as credit content on your VA loan. So I'm going to try to do a screen share and hop over to the slideshow real quick. Okay, there we go. So my previous video, you got to check that out, was underwriting VA loans. So we talked about the fifth bullet is for lenders, we have to document that you are a satisfactory credit risk. That's really one of the main underwriting components for a VA loan, is documenting that you're a satisfactory credit risk. Well, let me ask you this question. Who determines a satisfactory credit risk? Well, for the VA, that's actually up to the underwriter to decide. So it's going to be determined on a case-by-case basis. You may get one underwriter says one thing, you may get another underwriter that feels a different way. So me as the loan officer, I'm scrubbing it up front ahead of time. I've done so many VA loans, I can tell you exactly what's going to fly and what's not going to fly. So let me explain to you and educate you so that you understand. VA says you have to have suitable credit, right? So let's talk about suitable credit. First thing you got to understand is what makes up your credit score. So people don't realize this, but payment history is only 35% of your credit score. So if you make your payments on time, congratulations, you get 35% good credit. Now, the other, almost equally as important as making your payments on time, is keeping the amount that you owe on your credit cards low. So they call that credit utilization, specifically on revolving trade lines. So they say ideally you want to keep the amount that you owe under 30% of your credit limit. I always say 25%. So for example, if you have a credit card with a $1,000 credit limit, you want to keep that balance of your credit card below 25%. If it's above that, it starts to negatively impact your credit score. Anything over 50% utilization is going to have a high impact on your credit score. All the time I get people that their credit card is over the max, or they're really close to the max. Guess what? You're losing out on 30% of your credit score. It's huge. It's the biggest thing that you can do if you're needing an immediate bump in your credit score. So one thing to understand about credit is, let me make sure I'm not covering this in the next slide. One thing you got to understand about credit is it's a man-made number. The Fair Isaac credit reporting numbers that they give you, it's a bunch of baloney, in my personal humble opinion. They're for-profit company. That's the first thing you need to understand. They are not a non-for-profit. They are not there to help you. They are there to make money. Okay, and their credit score is just a man-made number that gives lenders what kind of a risk you are. So doesn't mean anything about you're a bad person, but who am I to put a number on you, or if you're going to make your payments or not? I think it's silly. So anyways, I'm not going to get on my soapbox there, but just know that the amount that you owe on your credit cards is super important. Make your payments on time. And ideally, they say you want 2 credit cards, an auto or an installment loan, and a mortgage. Those are the 4 things that you want on your credit. I'm going to move on from that real quick. So this is a copy and paste directly from the VA guidelines. The VA says suitable credit, the applicant's repayment practices on their obligations are the best indicator on his or her willingness to repay future obligations. So what does that mean? That means, like, if you've got spotty lates all over your credit throughout your whole entire life, you've never been responsible with your credit, and you've missed payments left and right throughout the years, it's going to be really difficult for me to justify that you're a suitable credit risk, right? Wouldn't you say that? However, if you had just a one-time event, let's say you got out of the military and you struggled to get back on your feet, and then now you're back on your feet and your credit took a hit because of that, that's not really a big deal. One-time events that we can document, and if it makes sense, it's going to go. But if you've just got a history of lates over and over again, and you got a bunch of open collections on your credit, it's going to be really difficult to justify that. So bullet number 2, emphasis to be placed on the applicant's overall payment patterns rather than isolated occurrences. So like I said, we're looking at patterns. 2-year rental history or mortgage history is the best indicator. So the VA requires us to get verifications of rent on all loans. All right, so here's what the actual requirements are. The VA actually does not have a minimum credit score requirement. Most people don't know that. However, they do have content requirement. So let's talk about the content requirement. Also, the veteran's credit must meet the lender standards. So basically, the lenders, we're the ones making the loan, and we're the ones that have to get the loan insured by the VA. And if you were to foreclose, they're going to come back to us to make sure that we did a good loan. So it's up to the lender to document that you meet suitable credit and you meet the standards, okay? Now, if you have had adverse credit in your past, like I said, it's not the end of the world, it's not a big deal, but you either need to work with a credit repair company to get that stuff cleaned up off your credit, have your credit reported accurately, which is the biggest thing. And you also need to show that you're past your whatever the situation was that caused you to have the bad credit. So if you're still living check to check and you're struggling to get by and you're just kind of in a bad position, the first thing you've got to do is you've got to stop the bleeding immediately. You cannot start the credit repair process or try to buy a house until the bleeding has stopped. So you need to make sure that you're on your feet financially, that you're starting to get on a solid foundation. You're not standing in quicksand that's sinking. And if you need a better income job, or if you need to start saving money or just go down on your total bills, I can help you with that. I've got a ton of resources in the community. There are tons of companies hiring veterans. We can help you with that. The VA also says the circumstances that caused the delinquency must have been corrected. So if you had a low paying job and now you got a good paying job, we consider that corrected. Also, the VA says you must have reestablished credit. And they define since your derogatory event. So if you've had a bunch of derogatory items on your credit, the VA says satisfactory credit is genuinely considered to be reestablished after 12 payments from the day the last derogatory was satisfied. So the VA says you need to be 12 months back on your feet and past all your credit delinquencies. Not necessarily the case all the time. I can get by with less if you're a good risk. But that's what the VA says anyways. And remember, the VA loan guidelines are not hard, fast rules. They're just kind of leadway guidelines for the underwriters to be able to make their decision on. So what if you have collections? I get this question all the time. Collections depend, but it goes back to the VA says lenders should carefully review the complete credit history and use their judgment. Once again, it's up to the underwriter to use their judgment and decide. It's not unreasonable to question the borrower's willingness to honor their obligations if they have open collections. The old rule of thumb that most underwriters follow is $2,000. If you have over $2,000 in open collections, they might ask you to pay it off or to get on payment plan, or they're going to be like, the question I always ask is, all right, tell me what's the deal with this collection? What happened? Well, I just didn't pay it. That's probably not a good excuse, but hey man, I went through a divorce and that was my ex-wife's car. The divorce decree says she's supposed to take that car, but she didn't. And she ended up letting it go back, and now it's on my credit. Man, we can work through stuff like that all day long. Not a big deal, but it is something that we'll need to address. So a sound explanation is typically required. As long as it makes sense, we're good. But just, I just couldn't make the payments, and in the past 5 years, I've just never made a payment on time. It's kind of difficult for me to justify that. So hopefully that's helped you to understand. VA says you got to be 2 years out of bankruptcy, 2 years out of foreclosure. If you had a short sale and it's because of extenuating circumstances that were out of your control, we can get past a short sale. But bankruptcy, foreclosure, hard, fast, 2-year wait, period. CAVERS, you have to pass through CAVERS. What CAVERS is, I don't even know what it stands for, but it's the Government Credit Reporting System. So if you ever have a loan with the Department of Agriculture, Department of Education, like student loans, Department of Justice or HUD or Small Business Administration and the VA, or if you owe the military back pay, the government uses their own credit scoring model. They call it CAVERS. So if anything is reported to CAVERS, you will not have a clear CAVERS. Now, the crazy thing about it is the CAVERS does not report to the credit bureaus. So a lot of times, me as a lender, there may be something on the CAVERS that I don't know until we already get you under contract and my processor pulls it. So I ask a lot of questions throughout the process, doing my due diligence to make sure we're not going to run into any of these issues. So if I see student loans that were in collections or student loans that you missed a bunch of payments on, guess what? I'm going to go ahead and ask my processing team to pull a CAVERS report. You're either clear or you're not. Student loans is probably one of the biggest things that I see preventing people from being able to get loans nowadays. So the VA says we have to use the payment that's on the credit, or if it's deferred, they have to be deferred for at least 12 months after our closing date. So if we're going to close in April, it needs to start April 2021. So that's what the VA says on student loans. Compensating factors. What this is if you've got bad credit, it's okay, but you need to have some other things that compensate the bad situation. 3 months of reserves is the strongest compensating factor you could possibly have. A month in reserve is a mortgage payment. So if your monthly mortgage payment is $1,500, 3 months of reserves would be you've got $4,500 in the bank. That would be the biggest thing to overcome. Money in the bank can help overcome all things. So if you have no increase in shelter expenses, that's another compensating credit. Let's say, what if your wife works and she's got a good income, but we can't put her on the loan because she's got bad credit or something along those lines. A spouse's income could be a great compensating factor that I can go to my underwriter and say, look, he's got really high debt to income and low credit scores, but his wife works and I just can't put that on paper. So there's multiple things like that. Let's talk about compensating factors real quick. If you've got bad credit and you're just now getting over whatever hiccups were and you've got a job, but you don't really have any money in the bank yet, and your debt to income ratio is really high, it's going to be difficult for me to justify those things. But let's say you've got bad credit, but you've got really low debts, you're making really good money, you got a solid job, you got some money in the bank. We can overcome that all day long. But having all three against you, no money in the bank, bad credit, and high debts, that's going to be really difficult to justify. So if you've got two of the three, maybe. If you've got one of the three, we can probably almost guarantee I'm going to be able to get you a loan. Two of the three, questionable. Three of those three things, it might be difficult. Okay, so that's it on my slideshow there. So just know that credit, a lot of stuff can be overcome. I'm here to help you. I'll be able to look at your credit report and tell you really quickly exactly what you need to do. If you need to seek professional credit counseling, credit care, I've got I can hook you up with a credit repair specialist where we're going to get your credit accurately reported as quickly as possible. So you guys feel free to reach out to me if you have any questions anytime. I'm here to serve our veteran community and I'm here for you. Thanks.